Imagine this. Two people start their careers at the same time. They earn the same salary. They live similar lifestyles. But fast forward 20 years, and one of them is financially free, while the other is still living paycheck to paycheck. What made the difference? Investing. One person let their money sit in a bank, slowly losing value to inflation. The other? They learned how to invest wisely, letting their money grow, multiply, and work for them. And here's the truth, anyone can do this. But most people don't. Not because they don't want to, but because investing seems complicated, risky, and overwhelming. Where do you start? What if you lose money? What if you don't have thousands of dollars to invest? That's exactly why I made this video. By the time you finish this guide, you'll know exactly how to start investing, even with little money, and how to make smart financial decisions that build long-term wealth. And at the end, we'll reveal a powerful investment strategy that has created millionaires, without taking huge risks. Let's start with the most important lesson of all: why investing is the key to financial freedom. Why you can't afford not to invest. Most people think that saving money is the safest way to build wealth. They work hard, put their money in a savings account, and hope that over time, it grows. But here's the problem. It doesn't. Right now, inflation is eating away at your money every single year. Think about it. What could $10,000 buy you 20 years ago? A lot more than it can today. The value of money decreases over time, but the cost of living keeps rising. If you're only saving, you're actually losing money. This is why the wealthy don't just save, they invest. Because investing allows your money to grow faster than inflation, meaning that instead of losing value, your money gains value over time. And the best part? You don't need to be rich to start investing. We've already uncovered the biggest mistake beginners make, thinking that saving money is enough. The truth is, if you're not investing, you're losing money to inflation. But here's the next problem. Most beginners never start investing because they believe it's too complicated, too risky, or that they need a lot of money to begin. These are dangerous myths that stop people from building wealth. And today, we're going to destroy them. Because the reality? Investing is much simpler than you think, if you know the right strategies. How investing really works, and why you're already doing it. Most people think investing is about buying stocks, watching numbers move, and trying to predict the market. But investing is much simpler than that. At its core, investing means putting your money into something that has the potential to grow over time. And here's something shocking: you're already an investor. Every time you spend money on something, you're making an investment. 1. When you buy a new phone, you're investing in technology, but it loses value over time. 2. When you buy a car, you're investing in convenience, but it depreciates the moment you drive it off the lot. 3. When you pay rent, you're investing in a place to live, but you're not building wealth. But when you invest in assets that grow over time, stocks, real estate, businesses, you're putting your money in places where it can multiply. And that's the real difference between people who stay broke and people who become wealthy. Wealthy people invest in assets that make money for them. But what should you invest in? And how do you avoid losing money? Let's talk about the biggest mistake new investors make, and how you can avoid it. The number one mistake that costs beginners thousands. New investors always ask the same question: what should I invest in? But the truth is, what you invest in isn't as important as how you invest. And the biggest mistake beginners make? Trying to get rich fast. They jump into the market without understanding it. They see a stock going up and buy at the peak, only to watch it crash. They listen to hype, invest in things they don't understand, and panic sell when prices drop. This is why most people think investing is too risky. But here's the secret: the smartest investors don't gamble. They build long-term wealth. How? They follow a simple, proven strategy that has built more millionaires than anything else. We've already uncovered two harsh truths: saving alone won't build wealth, and chasing quick money is the fastest way to lose it. Now comes the next big question: what should you actually invest in? This is where most beginners get overwhelmed. Stocks? Real estate? Crypto? Gold? Should you pick individual companies or just follow the market? Here's the truth. There isn't just one right answer. But the world's best investors, people like Warren Buffett and Ray Dalio, all follow the same simple strategy that builds wealth consistently without needing to constantly watch the market. Let's break down the safest and smartest investments for beginners. The 3 best investments for beginners. If you're just starting out, you don't need to take big risks to grow your money. In fact, some of the safest investments are also the most profitable over time. Let's break them down. 1. Index funds. The easy path to wealth. Instead of picking individual stocks, which is risky and time-consuming, you can invest in entire markets at once. This is where index funds come in. An index fund is a group of stocks that follow a specific market, like the S&P 500, which tracks the 500 biggest companies in the US. Upward trend. Why is this a smart investment? 1. The S&P 500 has grown by an average of 8–10% per year for decades. 2. You don't need to pick stocks. You own a small piece of every major company. 3. It's low cost and requires almost no effort. Even Warren Buffett, one of the greatest investors of all time, says that most people should just invest in index funds instead of trying to beat the market. 2. Real estate. Building wealth through property. If you've ever heard the phrase, "the rich get richer," real estate is one of the biggest reasons why. Owning property allows you to build wealth in 2 ways. Your home or rental property increases in value over time. House. You can earn passive income by renting it out. Upward trend. Why is real estate a smart investment? 1. It's a tangible asset. Unlike stocks, you can physically own it. 2. You can leverage money, meaning you don't need to pay the full amount up front. 3. People will always need places to live, so demand remains high. Real estate requires more upfront capital than stocks, but if done right, it can be one of the most powerful ways to build long-term wealth. 3. High-yield savings and bonds. The safe option. If you want zero risk, you can keep your money in a high-yield savings account or invest in government bonds. These options won't make you rich, but they're perfect for 1. Keeping your emergency fund safe. 2. Earning interest without risk. 3. Having stable returns even when the market crashes. Upward trend. Why is this a smart investment? 1. No risk of losing money. 2. Good for short-term goals. 3. Keeps your money growing while you invest in higher growth assets. So, which one should you choose? That depends on your goals, risk tolerance, and time horizon. But here's the key. The real secret to wealth isn't just picking the right investments. It's about how you invest and the strategy you follow. By now, we've broken down how investing works, the best assets for beginners, and why starting early is the ultimate secret to wealth. But before we dive into the ultimate investing strategy in part 4, there's something you need to know. Because even though investing is simple, most people never build wealth. Why? Because they believe the biggest investing lies, myths that keep them stuck, afraid, and broke. And if you don't recognize these false beliefs, they could stop you from ever reaching financial freedom. Let's expose them, one by one. I need a lot of money to start investing. This is one of the biggest myths that keeps people from ever getting started. Most people think they need thousands of dollars just to begin. The truth? You can start with as little as $10. Today, you can invest in fractional shares, meaning even if a stock costs $500 per share, you can buy a small piece of it for $5. You don't need a fortune to start. You just need to start. Investing is too risky. People hear stories about market crashes, bad investments, and people losing money. So they assume investing is like gambling, where you either win big or lose everything. But here's the truth. The real risk isn't investing. The real risk is doing nothing. Because if you let inflation eat away at your money, if you never let your savings grow, you're guaranteeing yourself a lifetime of financial struggle. And remember, long-term investing isn't about gambling. It's about owning assets that grow over time. If you invest in a diversified index fund like the S&P 500, you're not just betting on one company, you're betting on the entire economy. And over the past 100 years, the economy has always grown in the long run. I'll start investing when I make more money. Most people think, I'll invest later, when I have extra cash. But here's the problem, later never comes. Because as your income grows, so do your expenses. The people who become wealthy aren't the ones who wait until they make more money. They're the ones who start small, stay consistent, and let time multiply their wealth. Even if you only invest $50 a month, that small habit could turn into hundreds of thousands of dollars over decades. Waiting is the most expensive mistake you can make. I'll just save my money instead. Savings accounts are great for emergency funds, but if you're keeping all your money in the bank, you're making a huge mistake. Why? Because your money isn't growing, it's shrinking. If inflation is 5% per year and your savings account pays you 1% interest, you're actually losing 4% of your money's value every year. Meanwhile, investing in the stock market historically returns 8–10% per year over time. The difference? 1. $10,000 in a savings account for 30 years equals about $13,000 after inflation. 2. $10,000 invested in the stock market for 30 years equals over $150,000. The difference between saving and investing? One keeps you comfortable. The other makes you wealthy. The truth about investing: most people never invest because they believe these myths. They think it's too risky. They think they need thousands of dollars. They think they have plenty of time to start later. But the truth is simple. Investing is the only way to escape financial struggle. And if you follow a simple, proven strategy, you can build wealth with almost no effort. It's simple. It's low risk. And you can start using it today. We've already uncovered why investing is essential, the biggest mistakes beginners make, and the safest assets to invest in. But now, we've reached the most important part. How do you actually build long-term wealth, step by step? This is where most beginners get stuck. They don't have a strategy. They buy random stocks, jump in and out of the market, or wait too long trying to find the perfect moment. Meanwhile, the wealthiest investors use one simple, proven strategy that builds fortune after fortune. A strategy so powerful that it has created more millionaires than anything else. And the best part? Anyone can use it. This is the key to turning small investments into a lifetime of wealth. Let's break it down. The ultimate investing strategy. The power of compound growth. If you remember only one thing from this guide, let it be this. The earlier you start investing, the richer you will become. Why? Because of compound growth, the single most powerful force in investing. Albert Einstein called compound interest the eighth wonder of the world. And once you understand it, you'll see why. Let's look at two people. 1. Person A starts investing at age 20 and puts away $200 per month. 2. Person B waits until age 35 and then invests $400 per month to catch up. Who ends up with more money by the time they retire? Person A wins, by hundreds of thousands of dollars. Even though Person B invested more money, Person A started earlier, which meant compound growth had more time to multiply their wealth. This is why time in the market beats timing the market. If you keep your money invested for long enough, it grows exponentially. How to invest like a pro, even as a beginner. Now that you understand why investing early is the key to wealth, how do you actually apply this? Here's a simple 3-step strategy that anyone can follow. 1. Invest a fixed amount every month. No matter what, most beginners try to time the market, waiting for the perfect moment to buy. But professional investors know the truth. The best time to invest was yesterday. The second best time is today. The strategy? Dollar cost averaging. This means you invest a fixed amount every month, no matter what the market is doing. 1. If prices are low, you buy more shares. 2. If prices are high, you buy fewer shares. 3. Over time, your cost averages out, and you reduce risk. This removes emotions from investing. You're not gambling, you're building wealth consistently. 2. Focus on long-term growth, not short-term gains. Most people think investing is about quick profits, watching stock charts, and buying low, selling high. But the wealthiest investors? They don't trade daily, they hold investments for decades. The longer you hold, the more powerful compound growth becomes. Here's proof. If you had invested $1,000 in the S&P 500 in 1980, it would be worth over $100,000 today. The key? Patience. Investing isn't about getting rich overnight, it's about letting time and growth do the work for you. 3. Automate your investments and forget about them. The final step? Make investing effortless. Set up automatic contributions to your investment account every month, just like a subscription. 1. You don't have to think about it. 2. You don't have to time the market. 3. You don't have to stress about daily price changes. This is how millionaires are built, not by trading every day, but by consistently investing over time. The biggest mistake beginners make? They try to do too much. The best investors? They follow a simple system and let time do the heavy lifting. Final thought. The best time to start is now. Right now, you have a choice. You can wait, overthink, and keep wondering when the perfect moment to invest will come. Or, you can start today, even with a small amount, and let time and compound growth build your future wealth. The stock market doesn't wait for anyone. Every day you delay is money you're missing out on. Because the secret to wealth isn't how much you invest, it's how soon you start. The sooner you take action, the greater your financial future will be. Fire. If you found this guide valuable, hit like and subscribe for more investing strategies and wealth building tips. Speech balloon. What's stopping you from investing? Let's discuss in the comments. Loudspeaker. Turn on notifications so you never miss an update on financial freedom and investing.